Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 7.24% year to date. Today is going to be a real quick recap because not much has changed in the portfolio from the information from this week compared to last week. So I'm going to try to really shorten the presentation down this week. We have a green market signal, and here is where we stand with our positions. Here are some past returns for SPY Trader Now on the model portfolio. Last week, the S&P 500 gained 1.87%. Look here, I thought we were going to potentially have a 10% correction. Instead, we did not. It is bouncing and right back to the old highs. There were no trades made last week. Here are the trades that we've made in 2024. You can go over here to see all the last trades I've made for the past 3 years. There'll be links in the description for everything that I am presenting to you. We have 2 open positions. Now I am upside down in a put position, $264, but the market advancement last week was so strong that I'm making that more than that up in my 200 shares that I hold of SPY. If you want to see how I do this, go ahead and hit that like button right now. Subscribe to my channel and ring that bell. Here is the equity curve for our model portfolio 2024 year to date. This is the equity curve of the S&P Buy and Hold Investor 2024 year to date. This is the 2 portfolios on the same graph on a percentage basis so that we can compare our model portfolio, which is in blue, compared to the buy and hold investor, which is in pink. We want to be surpassing this in this line here. The blue should be above the pink, but it's not. But we have plenty of time between now and the end of the year to make that happen. Fed Chair Jerome Powell, next interest rate announcement, June 12th. I talked about this last week. You can go ahead and hit last week's video if you want to see everything I talked about for the Fed. Now we're looking at presidential election cycle theory. 4th year, President Biden. Historical for S&P 500, 6.7%. Currently, buy and hold investor up 9.58% year to date. So we're a little top heavy. Now, bond market outlook. Still inverted yield curve. Bond market says stay out of the stock market. Warren Buffett, Oracle of Omaha. CNN Business, Fear and Greed Index. We are currently in neutral. The market is going from 40, which was a fear condition, over to a greed condition. Now, seasonality outlook. Currently, month of May. For a 20 years look back, 75% probability we're going to close higher than when we opened. Well, the month is up 3.76%. Look at the green candle. We have plenty of room that this market can drop and still be positive for the month, meeting that 75% expectation. Now, this is going back 10 years, 90% probability positive this month. Going back 5 years, 100% probability that we are going to close higher than when we opened the month. Long-term outlook, 20-year monthly chart. We are currently in a long-term bull market. We are definitely in that. You can see here how the market dropped, and we are just about at old highs. Now, here it is on a weekly 5-year candlestick chart. Put in a 10% correction. Nowhere near a 10% correction. You can see the V bottom down and straight back up to almost old highs. Now we're looking at daily 6-month candlestick chart. I drew in these trend lines here so that you can see where we currently reside, right at the old highs. All right, now we're looking at a ratio chart for the NASDAQ 100 to the S&P 500. Here is I'm seeing a negative divergence in which the ratio chart has fallen down lower, but the S&P 500 has gone up higher. I am suspecting, especially since the ratio chart is at this upper end of this range, that either we're going to break down from here on the ratio chart and the S&P 500 will follow, or this market is so strong that it will break this resistance line and go up, and the S&P 500 will continue to advance. So I'm going to monitor this real closely. Now we're looking at another ratio chart with the equally weighted compared to the normally weighted S&P 500, but there's nothing to speak of this week, so I'm just going to leave it on here for transparency. Now we are looking at the VIX Volatility Fear Index, and we are in the ultra low range, which generally speaking is bullish for the S&P 500. You can see this is a daily chart, by the way. See the word daily right there? Each candlestick here is 1 day's worth of action, so you go back 5 days to figure out a week. During the last week, fear has just been sucked out of this market. And the problem that I'm seeing is that we are just at the very, very low range here of 12.55. And normally when you hit these low ranges, you get these spikes coming up. Or on that spike coming up, that's when the S&P 500 will have some type of a pullback. Maybe not large, but some small movement where it'll come down a few percentage points so I can close out my put. Now we are looking at the Thinkorswim platform 5-year weekly candlestick chart with standard deviations, +2, -2, +1, -1. And you can see that we're just trying to come back up to our old highs here. We did not even, this market is so strong, it can't even get down to these levels. 1-year chart, same thing, except it's just 1 year daily, and it's still showing that strength, and it's above the 50-day. Now it's the same thing except 6-month chart, and we are above the 50-day, almost at the regression line, and we are watching this here. A chart that I've created on Excel just to kind of get an idea of asset classes and the 11 S&P 500 sectors. And what I want you to call out this week, last week we were in yellows. This week we are in greens. Look at all the green and all the number 5s and 6s that you have here on your asset classes and on your sector strength. This market remarkably has improved over the last week. Now we are looking at a 1-year chart of the 10-year bond yields. This is the main reason why the S&P 500, which is in dark blue, has advanced. During the last week, bond yields on the 10-year bond yields have dropped, and the market loved it. As this dropped, that rose. But now you can see that over the past 4 days, we're kind of in this sideways pattern. Well, if we start to go up, the market will not like that, and it will come back down, giving us a little bit of a pullback, I should say. So I just gave you guys a quick summation. Here is my market summation as of May 10th, 2024. Market summation according to me, Ken, your friendly host with SPY Trader Now. I was premature in taking on that put. I recognize and acknowledge that. I do want to exit it as soon as possible on some pullback. Luckily, I'm only upside down $264. Not bad on my 100,000 plus portfolio. The month of May is poised to have a positive return, and we should be long right now. My intention is to go long. Anyways, that is going to conclude this video. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, ring that bell. I thank you and wish you good trading.